Hello and welcome to a new special edition of the closing bell that we're doing this week, and we'll do so from here on in. We wanted to bring Murray and myself to you as part of the Fat Tail Daily service. So 4 days a week, I'll be writing to you Monday to Thursday, and then on Friday, Murray and I are going to sit down and take a look at what's going on in the markets, as he has done in closing bell, and what he's watching and what he's looking for. We just thought we'd do it in a more interactive way. So absolutely, send in your feedback if you what you want to see, what you want to do. Murray has ideas to talk about trading psychology and different charts. This week he's been including a chart of the day every day, and we'll keep doing that so we can tee off those. If they're one of them is of particular interest, just drop it in the comments or whatever, and we can pick it up. But for today, Murray and I are going to be chatting three things that he's noticing. One is the US dollar and what's going on there, and how that might play out in different markets. Second is the impact this might have on precious metals, especially silver, which is a key market Murray is watching. And then we're going to chat about a trade of mine that's going on, and we'll get Murray to take a look at the chart and see how it's shaping up according to his framework as well as mine. So Murray, thanks for joining me.
Yes, Callum. Hopefully, this will be a bit of fun. Have a bit of a chat about trading, because when I'm doing my closing bells, I'm usually talking about the charts, that sort of thing. But if we're having a bit of back and forth, we can sort of discuss other matters, about what it's like actually trading, and how it can be a pretty stressful pastime. So I think chatting with people about the actual ins and outs of the trading game, and how to get by, I think can be of use. It'd be nice to hear from people what they think. So let's get stuck into it, see how we go.
Absolutely. So you told me earlier in the week that you're really hot on what's going on with the US dollar at the moment, and we'll just quickly flip back to last year, August, when we got a big sell down in the market. In hindsight, it was quite brief and quick, but at the time, it looked like something big was shaping up, because it just rolled through the market, and we got a hard sell down for a couple of days there. And that was stemming out of what was going on with the US dollar Japanese cross rate, if I
Yeah.
remember correctly. Now, you're flagging that we might be looking at something similar forming now. So walk us through it.
Yeah, well, I've look, two weeks ago I put together a closing bell where I basically put out the warning that I thought the US dollar was about to get hammered, and the US dollar dollar index was at 108 at the time, and this morning I've woken up and it's down at 106.3. So it's already off two big figures in the last 2 weeks, and I think that's just the beginning. And what's going on is we've got US rates have actually, I think, are also going to start falling as well. But in Japan, we've got their rates, their 10-year bonds now at 1.44%. And that may sound low, but they were at zero just a couple of years ago. So their rates are going up very rapidly, or their bonds are selling off. And also with US rates going down, you can see that US yen currency would probably turn back down. So the US going down and the yen going up. When that happens, people who have borrowed in the yen and then invested in the US, and what we learned in August last year was that people were actually investing in the Magnificent Seven. So they were borrowing in yen at near 1%, very low rates. I thought they were investing in US Treasuries, but they were actually investing in the Mag 7. And so in 2 or 3 days, we had the NASDAQ got sold off 10% last August. Everyone's forgotten about that now. But the US yen, I said a few weeks ago, I was saying, look, watch out for this, especially under 150. And it was up at 152, 153. And last night, it got pretty hammered as well, as now under 150. And that's where the actual real selling of the unwinding of carry trades really got going in August last year, was under that level. That's where it really got hammered, because what happens is once these guys are losing money on their trade, if the currency is moving against them, and then they have to sell out of their NASDAQ, change the currency back from US dollars into yen, and then unwind that leverage. So that then, once it starts going, so once the US dollar starts really selling off and the yen starts strengthening, that then feeds into other carry traders hitting their pain threshold and saying, oh, we better get out too. So all of a sudden you've got everyone trying to get out the door at once. So things are just getting set up and sort of playing out as I expected. I'll just show you here now on this chart. This one here is the US dollar index, and this is what I've been saying to people was this is the chart over, from 2009. So the US dollar's been in a very long-term uptrend, and the most recent wave higher you can see there, which I've just pointed out and did a terrible job of showing you. Hang on, is that wave there? I've been looking at the sell zone of that, which is that area there. So I've been watching it like a hawk, and the US dollar rallied massively into Trump's election, and I think went a bit too far. And now we're seeing the heat come out of that. So now that it's gone back under that 107 level, you're actually setting up this month for a monthly sell pivot in the US dollar, and that's from a major sell zone. So really, I'm thinking this US dollar can actually go, for starters, back to this 102 level, which is the midpoint of that whole wave higher from 2021 to 2023. So that's how I'm starting to look at the markets now. When the way that those major currencies are going and those 10-year bonds are moving, that obviously feeds into everything.
Well,
So
the immediate one that jumps to mind is, what does that mean for gold then? Because
yeah,
it's
well, which is
obviously,
interesting because gold's been flying even though the US dollar's been rallying. So that shows you just how strong gold is. Is that it's actually rallying even though it should have been going down while the US dollar's going up. So that shows you that the gold is really, really strong. So you'd think if the US dollar really gets hammered that gold might have another spurt higher. And silver too is the one that I'm looking at, thinking up through $35. That can really run. And there is a bit of dislocation in the silver market at the moment. So people sort of scrambling for physical.
well, I know Brian, over our colleague over at his services, sees silver as very important as a kind of a risk-on signal for the gold juniors. There are not many ways to play silver, as I understand it, on the ASX. Is that a problem?
No, there's a few. I'm just starting to have a look at a few. I haven't done enough due diligence yet. And I won't even show the charts yet because I'm probably going to give a few of them to my microcap trading people. So I'll keep those silver stocks under wraps until I figure out the right one to get into. But yeah, no, there is definitely a few. There's a few that have just sort of started production and that are actually looking at bringing back old mines that have been on care and maintenance, pretty prolific mines. That are going to come back online. So there's a few opportunities out there, but yeah, not many on the ASX.
Well, that's interesting because we've seen in the gold sector, I'm thinking of Black Cat and Catalyst Metals, which are bringing on mines as we speak, and they've had a ripping run. So, I mean, the setup, if silver can run,
Mm.
you can get some ripping trades away as the market goes. Well, maybe those operations weren't possible with silver at 30
Yeah.
bucks or whatever. But if it can push up into the 40s, 50s, or whatever, suddenly the whole dynamics change, and
Well,
that's
that's
kind
well.
of what we've seen in gold.
Yeah, you want to be finding the high cost producers at the moment. People usually stay away from the high cost producers because they haven't got much margin. But if you're only making $100 or $200 on your gold, and then gold goes up $200, your margins have gone up 100%. So your profit making has just doubled. So those high cost producers that are usually trading quite cheaply can be way underpriced if gold really runs, and their margins actually expand much more rapidly than a low cost producer. So there can be those little things that you can look for, and just the gold in the ground, because when gold really goes up, the modelling on gold, they'll say, oh, we'll have a cutoff, let's say at half a
Mm.
gram per ton or something. And they can say, well, now with gold where it is, we can have a lower cutoff, and all of a sudden, I thought I had a 500,000 ounces, I've actually got 1,000,000. So the whole modelling can change, and so it all can, for that smaller end of the market, can really. That's when late in a bull market, those ones can really start flying.
We should just say off. You're now doing a chart of the day for Fat Tail Daily, and I think it was Monday that you put in the gold chart. That just when you projected forward the potential for gold to keep running for another 5 years, possibly all the way perhaps to 5,000 US an
Eight
ounce, or
eight
even
thousand.
more. Yeah.
All that I was doing was just saying, if we just imagine that we got the same rally we saw in 2001 to 2011, and we say that it started from 2015, which was the end of the big correction in gold. If we just took what actually did happen and just extrapolated it from that 2015, that would take gold to $8,000. I think people really anchor their idea of what can happen to the current price, and they don't realize just what can happen. I'm telling you, no one in 2004, when gold had rallied 100% and was at $450 or something, no one was saying it was going to $1,900 in the next 5 years, which is
Well,
what
we
it
don't even
actually
have to go
did.
back to 2004. I mean, look at the lithium boom. I mean, lithium started rallying in like 2020. By 2022, what it gone to 20,000
Hmm.
ton or whatever, however they measure. I can't remember anymore. But it just went absolute bananas, and those stocks just went insane because they had the massive story behind them of
Yeah.
electric vehicles and
You can't
batteries.
predict what would actually happen in the market. The markets do crazy things. You want to be able to get yourself into a position where you can be sort of no risk to you and on a trend and just letting it go, because you don't know where it's really going. You just want to be on a trend, and once it really is flying, just hold on for dear life, and you could end up being surprised by how high it goes. It certainly happened with a few of our stocks that we've been in. I didn't know they were going to go up, 1,000%. I just liked them and thought, oh, let's just sit in this and see how we go. And then all of a sudden, sometimes crazy things happen.
Well, and gold is perfect for that because it just has the psychology of like this could keep going up and up and up and up because there's no real theoretical limit to a
Yeah,
certain degree. It
and
depends
we'll
on
have corrections along the
the
way.
money
Look,
supply.
maybe we're getting to a point where everyone's getting so bullish that it's going to need to have a correction soon to shake everyone off. But
But yeah, I know what you're saying with that. But yeah, the price action on the market in the gold stocks or any of the stocks really, it doesn't scream speculation. It just
mm,
doesn't feel like there's a roaring gold bull market going on.
yeah,
It's still
it's been interesting the way gold's been moving recently, and a lot of the gold stocks certainly hasn't felt like a frenzy of buying at all.
no, that's what I mean. Like I mean, certainly there's been some good trends that you can get on, but it just doesn't feel like the wild speculation or the crazy one day gains and things just pumping because it's
Yeah.
pumping.
Well,
It
I
just
think the whole speculative end of the market just got so killed in the last few years. I think a lot of speculators aren't coming; they won't come back because a lot of people lost a lot of money in the smaller end of the market over the last few years, and it's only just now trying to get off the canvas. And a lot of the resource stocks, they're not, because even though the emerging companies index is rallying, it's mostly the large stocks in that index that are running, which are they're still multi-billion-dollar companies.
mm,
The little stocks, there's so many that are still really on the floor. So I think a lot of speculators, we almost need another generation of speculators to come back in, which will happen as rates start falling. That's when things can start lifting again, and maybe this US dollar getting hammered will start to lift those commodities, other commodities. Copper and ones that are really been hammered,
well, I
maybe
was just going to
we'll
say,
start pulling
gold
out.
is really the only commodity that's doing anything at the moment. I mean, nickel, lithium, they're still
Copper's certainly had a run recently.
copper's perking up. Yeah,
Yeah,
absolutely.
yeah,
I
but
mean, it's always good.
not
Good for
many of
that.
the others. I think China, everyone's still worried about China. With the US, Trump, what's actually going to happen with the tariffs. Their property market's still got years to play out because they've had a lot of construction that's actually still happening, which was already sort of done and dusted. So that's where the iron ore demand and that sort of thing is still holding in there because there was all this leftover construction still coming through. But the actual property market is really in the doldrums and still has years to play out. So if Trump goes and kicks them while they're down, I guess you could be a bit worried about the whole resource space a bit. But now that I really do think I'm getting more confident on this US dollar call, every day, that it is a bit of a changing of the guard and that we could actually see a bit of a weakening US dollar. So that's what people can have in their minds as they're,
I'm
planning out
assuming
this year.
Trump would be happy with that, right? Like if he's all
You'd
about
think so.
trade
If
and
you,
stuff.
if they're going to get rid of their deficit, it's a weak US dollar that's going to do that rather than a strong one. So their trade deficit.
Absolutely.
Yeah,
Well, we talked a little bit about commodities. I said you'd bring up a chart of one of my particular trades
yeah,
going on at the moment. Do you want to bring up
yeah.
MLX? So this is a tin miner and down in Tasmania. And the interesting thing about tin is that it's a very obscure niche market, but it's actually been one of the best performing commodities over the last couple of years. Now, MLX is pumping out very good cash flows at the moment. At an annual rate, they're on track to do 100 million in free cash flow a year.
Right.
So, the question is, can it keep going? So, I thought I'd get you to bring up and look at the chart.
Yeah, well, it certainly
It's
looks.
flagged on
You
the
know,
algo that I run with small cap systems.
well, I mean, you can see straight away. It's in long term uptrend. So there's a rally from 2022, which I've got there, and it all sort of jumps out at you pretty
But
quickly. There's
I was
the
going to say that's a classic move from that period, and then the drop down from
yeah,
2022
there's the
to
buy zone.
2023.
Yeah, so there's the buy zone for me, and it got right down there perfectly. So I got to there. Then we had an attempted rally there which failed, but then that went down to its buy zone. So there was a nice clear out. And then we've got the long term trend shift there, and it's taken off. So this is where I sort of calculate off those monthly bars. So I'm looking at the key bars as they rally, which is if I get a buy pivot, I'm looking at the high of that. It's got to have a monthly close above the high of that to be a key bar. So I'm looking at that as a key bar. And then I do calculations off that bar. And you can see, it sold off right to the buy zone of that key bar. All of that months and months of trading is all within that range, that monthly range. And now here we are breaking out, and this month will be the next key bar. So it's been many months of sideways motion, and now it's just kicking higher again within this long-term uptrend. So that's all looking, really, really great. If you're on that, you'd be just letting that run, and it could have a bit of trouble up around the sell zone of that wave. So that's the area of concern. But ultimately, you're looking at this long term uptrend and riding that as far as you can.
Well, the
So
beauty of
that,
this
that
is,
looks pretty good.
like with your technical analysis, you can take the chart view, and then that's looking good, but then fundamentally, we know this thing is just making a lot of money. So the fundamental driver is there to keep pushing it higher. It's of course it's all
It's it's
predicated on the tin price.
it's always both. I mean, I don't know. You've got to have the fundamental and you've got to have the technical. I mean, if you only understand one or the other, I think you're lost. But if you've got both and they both marry up and agree with each other, that's when you can get absolutely brilliant trades.
Well, you alluded to the sell down in August last year, and I've been following MLX for a while. It sold down to 38 cents in that shakeout. But the interesting dynamic of that was that it was a market sell down rather than a stock specific sell down, in the sense that the tin price was still high. They were still operationally going okay. But just that volatility that rolled through just took out the short term guys, and
Yeah,
everyone just dumped it like they were dumping everything, kind of
and
thing.
that's really what my whole trading method is waiting for the shakeouts and then waiting for the momentum to turn back up and buying it soon as the momentum turns up. So you're getting on really early and you're buying weakness. So you're trying to join long term strength and you're buying short term weakness. So
Absolutely.
that's really the crux of what I do because market's always shaking people out. That's the big boys know exactly how retail traders think. They know they get on when things are looking bullish, and they know all they got to do is smash it a little bit, and they'll all get shaken out. So if you want to buy, if I was a guy running billions of dollars and I wanted to buy, I'd sell the stock. I wouldn't buy it. I'd push it down to shake everyone out and buy the stock off them as they're panicking. So really, you've got to understand all of those things and try to take advantage of them. And that's really what my whole model that I try to show people is doing. It's about understanding how traders behave and taking advantage of it. Really,
Yeah, absolutely. So it'll be interesting to see if we do get that. any volatility come through from the cross rate with the yen and the USD. Obviously, in these videos, we can talk through some of these ideas as we go along. Depends what happens. As it is today, though, the market is still relatively. It's not that
Yeah,
volatile out there.
yeah.
It's
No, it's fine. It hasn't
it's
really
neither.
started yet. The US yen's certainly going, but and we saw weakness in stocks last night, and the Nasdaq was down more than up the other stocks, but they're all at the all-time highs, aren't they? So maybe the carry traders can get out of their positions without the market really falling over because there's so much demand around. So I certainly haven't seen stocks dumping yet, and I don't have anything technically on the charts on the S&P or the Nasdaq saying that everything's unwinding. I mean, I'm still long. I'm certainly not selling yet. I'm just saying that the way things are set up, watch out for that US dollar getting hammered. So there could be trades there that people do. Maybe someone has done one. Leave a comment. Let us know if you've been trading off that US dollar call because it's been a big fall in a couple of weeks. And that US yen, I think they're both going to fall. It just depends whether that then carries over into stocks. I guess we'll find out.
Well, it's a funny market dynamic because I made the comment to my guys a couple of weeks ago. I said, well, the market shrugged off the Trump tariff when he put the tariffs on Mexico and Canada and China the other week. The market sold down on the day, but then it just kind of, I mean, we kind of knew they were coming as well. But at the same time, in Australia, that top 20 just doesn't look like doing anything. The banks are probably going to top out around here, at least going off
They're getting
the
hammered.
announcement
The banks are getting
for
smashed at the moment. Yeah,
their
I'm
results.
looking at them closely because the Aussie banks are looking ready for to sell off.
Absolutely. So, to my mind, there's kind of this dynamic where the market's resilient, but you're not doesn't the main index doesn't look like it can go anywhere anytime soon. There just isn't the earnings there or the excitement to drive it higher off anything. So you kind of have to be in that mid cap, small cap space to find something that's going to go for a run. Would you
Yeah,
agree with that?
yeah. I'm definitely finding a few things. We just went into a sort of still a multi-billion-dollar stock. I won't say the name, but it's up nearly 15-20% in less than a month, and after good results just came out. So there are things that are powering, but it's a very binary market. There's a small section of the market that's really powering. And then there is a big section of the market that it's quite bad. They're just still trending down. So it is really a stock pickers market at the moment.
Yeah, I was one thing I've noticed a difference. So in 2023 is going back a little bit. Remember, we had that period where it was just a grind. It was just a grind. Like it didn't really
Terrible.
matter what any
Yeah,
stock did, but
you couldn't make money. You couldn't
it
make
was
money.
yeah, it was
Yeah,
the toughest year I can recall in terms of just trying to get something to move. At least now, if the stock does deliver, it will get re-rated by the market. So that some of the macro things are still pressing on the index, but I know from one of my ones, Nanosonics this week, it's just shot at. Just the
yeah.
market just
I
loved the
actually I
result.
actually picked up on Nanosonics. I was going to run the ruler over it again, but it's just so pricey that it's tough for me to go for it. But I do like it. It actually looks pretty good on the charts, I must admit.
Yeah, I mean it's just I mean it's up 30% in 2 days, but that's just it's not to say that's going to happen all the time, of course, but um, the response from the market to those results is what you want to what you want to see, which we didn't see in 2023. So if you can find those stories where the market is maybe dumped it a few years ago and now it's sort of coming back to the story, you can get a really good uh, uh, go at it because the sort of they've been suppressed over the last few years, so your risk is lower to get a look at it. And if you can get the response, you'll get a good lift. So that's one that's working for me. There's a few that aren't working, but that's one that is working.
Yeah, no, I've just got the chart up now, and that's down from what $8 from 2021 down to $2.50. And look, it was so pricey anyway. God, I mean, what PE is it on now? I'm sure it's massive.
Oh, I don't know the P off the top of my head. The thing is with Nanosonics, it's a tricky one. This is where fundamentals can come in too. Is that their profit is very low relative to their revenue, but they pump a lot of their free cash flow back into the business. So it's a bit like Amazon back in the day where Bezos used to take all the profit and all the money and just pump it straight
Yeah,
back. And so
keep it at zero profit, and put all the money back in the business, and yeah,
yeah, so it always
grow and
looks,
grow.
crazy expensive on the PE and all this sort of stuff. But
Yeah.
not to say that Nanosonics is the next Amazon, but there's a lot of cash flow that goes through that business, is all I'm saying. But the market, you can see that big red bar down. The market, they did an announcement. I remember that, and the market wasn't happy and dumped it.
That
But I
there.
remember going over the stock. They had There's enough fundamentals there for the market to come back to it. So it's
And you can see, and technically, again, I'm always looking for these false breaks, right? So where people get shaken out. So where it sold off, see, that was a major low back in 2022, and people put their stop losses below major lows. So under here, a lot of people would have been selling out of the stock, dumping it, because that's where all the stop losses go off. And
I
so
should say
once that ends,
it was
once that
5 years. It
ends,
was 4 or 5 years of pain for a
yeah,
shareholder at that point.
yeah. And once it ends, then it turns up, bang! Look at that, takes off again. That's the false break, and then off it goes. It's ready to rally. So have had my eye on it the last um, uh, few months, and yeah, off it goes. But I could probably buy that on a pullback. I might have to keep an eye on that one.
Alrighty, well, let's leave it there. So if you're watching this, there's a couple of ideas to follow you: Nanosonics and MLX to see, and then we'll be watching for any volatility or selling
You might
pressure
see my
as.
mum walk past the back there. Hello, mum. I'm up at Hawk's Nest with my parents. It's my dad's 88th birthday this weekend.
Oh, good on him.
And mum's 90, and she's on screen. So there you go.
Beauty. Alrighty, well, we'll leave it there, buddy. And if you're watching this, thank you for watching. Don't forget to read Fat Tail Daily every day. Murray will be doing his chart of the day, and I'll put the notes out of what's going on in the market. And feel free to drop a comment, give it a like, and all those type of things. And we'll see you next week.
All right. Cheers, mate.